All right. Let's go ahead and get started. Welcome, welcome, welcome. This is the OKMM Make It Count webinar for April. Today we are talking about taxes, so specifically income taxes. And I hope that this is really informative to those of you who are either here as students or are here because you work with students. I actually had surprisingly quite a bit of fun putting this together because I got to work with an accountant who is very close to me to make sure that I got all this information correct. So let's go ahead and get started. If you have never been on one of these before, my name is Sarah Lorenzen, and I am a certified financial education instructor and an outreach specialist for Oklahoma Money Matters, also known as OKMM. We are the Financial Literacy Initiative out of the Oklahoma College Assistance Program and the Oklahoma State Regents for Higher Ed. And we do this Make It Count webinar every month on a different financial topic on the third Tuesday of every month. I am very glad that you guys were able to join us for this one today. And hopefully this will be a really, really informative one for you guys. Now, what I always like to know, because a lot of different people attend these webinars, is I want to know who you are. So I just launched a poll. If you would give me just a second of your time and go ahead and select who you are. Are you an educator? Do you work with students in college? Are you a college or a high school student? Go ahead and put that in. And if you are a high school educator, a college staff from a school, in the chat, let me know what school you're from, because I would really love to know where you're joining us from. And I'll give y'all a second to do that. I'm going to let some more people in. For those of y'all who just joined us, please take a second. Make sure that you fill out this poll and let us know who you are. Let us know what school you're from. All right. I see you, my friends from TCC. All right. What other schools do we have? Go ahead and let us know in the chat real quick. After you've answered the poll. It looks like we've got lots of college staff. We've got some college students, some college educators and high school educators. And we've got lots of other great folks here. All right, I see you, Rogers State University, Seminole State. All right, Absentee Shawnee Tribe. I am so glad that you guys joined us today. I always love doing these because we have such a wide group of people. So thank you so much for sharing that. If you feel comfortable, please still let us know who you are in the chat, but I'm going to go ahead and end the poll for the sake of time. But we've got lots of great folks. So thanks so much for joining us today. Let's go ahead and get started. If you've ever been on one of these before, you know that I have some norms that I always talk about, and this makes sure that all of the participants and the folks who listen to this on the recording kind of get the most out of this, as well as it's enjoyable for you and for me, and that you learn something. So please stay muted unless I specifically ask you to unmute to answer a question, not because I don't want you to talk to me, but because this is being recorded. So I want to make sure that there's as little background noise as possible so the people on the recording can hear. But I do want you to be interactive. Please use that chat function if you've got questions or if you have comments. Please make sure to do that. But do make sure that we're being respectful because this is a respectful space. And a lot of times we talk about money, regardless of what that topic is, it can be an emotional topic for folks. So let's make sure that we are being respectful to each other. A couple other things. These are just basic guidelines when I talk about these types of topics. So please understand this is not financial advice at all. It's still your money and what you choose to do with it. And very important, especially for this specific topic, this is only for educational purposes. This is not tax advice. I am not a CPA or an EA or anyone else who can give out tax advice. So if you have questions about your personal situation, make sure you seek out help. And I have resources of how you can find that help here in this presentation. So here's what we're going to talk about a little bit. We're going to talk a little bit about the history of taxes because it's actually quite interesting and you find out how far back taxes go. We're going to talk a little bit about the tax vocabulary because for me, when I first started having to pay taxes, this really was the most confusing part for me because I didn't understand what all those terms meant because there's lots of just stuff you need to know. We're going to talk about the different types of tax documents you'll see and kind of what they're for. I'm going to ask you some questions and help you figure out if you need to talk to a professional when you have to file your taxes. And of course, for next year, or if you're behind and didn't file them yesterday, we want to make sure that you know what you're in for. And then we're going to talk a little bit about if you do end up owing taxes during tax time, what do you have to do? And then if you get a refund, what are some things you can do to make sure you're being smart with that money? So for the sake of time, let's go ahead and get on with it. So let's talk a little bit about the history of taxes. When I first started having to pay taxes, I didn't realize how far back this went. Taxes have been something that has been part of human society for a really, 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 really long time, right? The earliest recorded taxation in society actually was recorded on clay tablets in southern Mesopotamia many, 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 many years ago, which if you don't know where Mesopotamia was, it is now modern day Iraq. Archaeologists confirm that people in ancient Egypt employed one of the first tax systems, and that was back around 3000 BC that they were doing that. But the Greeks are credited with taking the idea of taxation and spreading it to the modern world. So for better or worse, you can thank the ancient Greeks for the way we have to pay taxes now, because theirs was the inception of kind of doing it the way we do it now. The ancient Romans also had a tax system that were very, very similar to ours today. They had what they called an income or a wealth tax. They paid property taxes, inheritance tax, and they even had tariffs, which are taxes that are paid on goods that are imported. So it's kind of interesting because when we think of taxes, I know at least when I first started thinking of this, I was like, wow, like, okay, so this is just a thing. But this is something that has been going on in society for millennia, because we need to be able to pay for schools and all these different things, your public services, and that's what your taxes go to pay. So let's go ahead and get into some of the jargon. And there's a lot of it. If you have tried to do your taxes, or if you have been doing your taxes for a while, you know that there's a lot of things that may not make sense. So we're going to talk about those because we want to know what those things mean. Now, this presentation is specifically going to talk about income taxes. I'm not going to get down a rabbit hole of all the different other kinds of taxes, because honestly, I would love to have a professional to talk about those because they can get kind of complicated. So we're just going to talk about the basics of income taxes today, but let's talk about some terms. So income taxes, those are taxes on wages you earn. Your salaries, your wages you get from an employer, investments, other types of income that you have. Your payroll taxes, that's going to be the taxes that fund social programs like Social Security or unemployment insurance. And we'll talk a little bit more about those here in a little bit. There are capital gains taxes. You may have heard that called out before. Those are taxes that you pay on assets when you sell them. Big assets like stocks or your house, you may have to pay capital gains tax. Excise tax, that is taxes imposed on certain goods or activities. Things like cigarettes or alcohol or gasoline may have a tax on top of the normal price of it for one reason or another. Then there are property taxes. These are taxes that are levied on property you own, land, buildings of some sort. Most of this revenue goes to fund things like public services, roads, schools, the emergency responders in your area. And then there is a state tax, or what can sometimes be called inheritance tax. These are taxes that are levied on a person's property after they pass away. So if you've ever heard of someone passing away and their estate goes into probate, part of the probate process is taking out the taxes that are owed to someone within that someone would owe on their property. You'll also hear the terms gross pay, which is the total pay before taxes, and your net pay, which is the total pay after your tax and deductions. And I'm going to talk a little bit more about that because since we're talking about income taxes, that directly affects your taxes. It's something that you're going to deal with a lot as you're going into paying taxes regularly. So, as I said, your gross pay, you have your normal pay, right? That is before taxes, before any deductions. That is the amount that you get paid. And then your net pay is going to be your take-home pay. So it's everything that is after your taxes. And you kind of see here in this chart that once those things get taken out, that largest portion of the pie is what you get to take home. There we go. Now, when we talk about those deductions, what are we talking about? These are things that your employer will take out of your paycheck. What are some of those are? Some mandatory deductions: Social Security taxes, your state income tax, taxes for Medicare or federal income tax, any kind of local income tax. If you have any garnishments for child support or things of that nature, defaulted student loans, those are all mandatory deductions that come out before anything else comes out. And then there are things like voluntary deductions, like your retirement, your life insurance, disability. Now, when you go and you look at your pay stub, you can actually see what is being pulled out of your stuff, right? So this in your pay stub, here's our net pay, here is our gross pay. And then you can see here, this is what's considered your taxable salary and your taxes withheld. And this is on every single check. And at the end of the year, you will get a form, which I'll talk about here in a little bit, that breaks this down for you for the entire year. But this is how you can kind of see what is coming out and what is not during the year if you are a W-2 employee. And then here you'll also see the other deductions that you may come across if you elected to contribute to retirement or long-term disability insurance or any of those other type of things. All right. So let's talk about tax brackets. When you're talking about income taxes, there is a lot of talk about what is a tax bracket, about different people being in different tax brackets. And we're not going to talk about, how much is what and who falls into what category. But I do have this nice little chart for you that's from the Internal Revenue Service that kind of breaks it down as far as who falls into what category here. And this is a range of incomes that are taxed at given rates, the smallest being 10%, the largest being 37%. That is the current max in the US. And it is based on your income as well as your filing status. So depending on the filing status that you have, which I'll talk about what that is here in a second, the amount that they take out and the amount that you're taxed at can change. And this also varies by state. So depending on the state you live in, this could look a little bit different. Okay, so let's talk about some tax documents. So you have worked all year. It is January, and they are sending you all of your tax documents for the previous year. They have to send them out by the 31st of January, but let's talk a little bit about what they are. So when you see them, you kind of understand what they mean. So the first is a W-2. This is the standard form that you get when you work for an employer, you pull in a paycheck. This will break down your employer's identification information, your identification information, any wages or tips that you had, and what your employer actually pulled out of your check. So it'll detail your federal income tax they withheld, Social Security tax, any state income tax that was withheld for you, as well as if there's other retirement plans and things that are contributed to on your behalf by your employer. The next you're going to see is this 1099 MISC or miscellaneous. This is if you are what we call a contract employee, meaning that you are not actually employed by the employer, but you are as a contractor. Instead of withholding your taxes from your check, what they will do is they will actually just send you a 1099 form for all of the money that they gave you in that period that you were employed with them. And it's your responsibility to withhold that money for taxes in order to pay your taxes down the line. They don't withhold any money for you. So depending on whether you are a W-2 employee or you work as a contractor, which form you see is different. And if you've had more than one employer during the year, you may have more than one of these forms. The next, you may see a 1099 INT, which generally is interest income. So this is if you have a high yield savings account that brings in interest, or you have other assets that pay you interest dividends, you will likely see these forms that have to go with your taxes because that is considered income that you are taxed on. So you want to make sure that you have all of those. Another thing you will also see, specifically if you are a student loan borrower, or if you have gone in education, you may see something similar to this, but you will see what's called a 1098E. This is a form that is your student loan interest payment statement. So you can deduct, and I'll explain what that is here in a second, your student loan interest from your taxes in certain circumstances. And so your student loan servicer will send you this every year to tell you what you paid in student loan interest that following year. Make sure it is vitally important because they cannot forward these. So if you have moved in the last year, right? If you move at any point in this year, make sure that you go back to all of those employers that you had the year before and update your address. It is vitally important because these forms get sent not only to you, but to the IRS. So if you don't have one and you file and make a mistake, you may get audited, and then you're going to end up having to pay money on that. So it's very important to make sure that you have that information. So let's talk about marital status. Your marital status is your status when whether you are single, if you are married and you file with your spouse, what we call filing jointly, married filing separately, which in some circumstances, even though someone is married, they can file two separate tax returns, one for them and one for their spouse. There is qualifying surviving spouse, which is if unfortunately your spouse has passed away in the last year, that may be a filing status that you have at one point in time, as well as head of household. This generally is for single parents, maybe a single mom who has her children that she is responsible for and they all live in the same home, or a single dad for that matter. They would file head of household because they may be single, but they are not married, but they have dependents. So they would be called head of household. Now, let's talk a little bit about tax withholding. I noticed that I mentioned this. This is what's called a W-4 form. When you start as a W-2 employee, the very first day that you work, you will be given a form that looks just like this. What this is this determines how much your employer takes out in taxes every year for you. You can change this at any point, and you should. If you have a change in your filing status, if you end up getting married or you have children, you should always reevaluate this and submit another form to your employer to make sure that they're pulling out the right amount every month that needs to come out. So you're going to want to take these things into account when you fill this out with your employer, because this is going to determine how much money is pulled out on that W-2 that you get. And it is very important because if it's wrong, you may end up owing, or you may end up getting a really big refund, which isn't always the best scenario, because that could be money that you could be using every month instead of loaning to the government and getting back every April. So keep in mind, if your filing status changes, if you have multiple jobs, you may want to adjust to where you have more come out of one job and less come out of another, because that's going to affect how much is taken out as well. You want to take into account if you live in a two-income household. If you are married and have you and your spouse both work and you're filing jointly, that may affect how much taxes is taken out as well. So make sure that you take that into account. You're also going to want to look at if you are claiming any dependents. Do you have children? Do you have any, family members who you have custody of for one reason or another, because they can be considered dependents. And that can help or hurt your filing status if you don't take those into account. Also other credits. If you are getting credits for having children or dependent care tax credits, which we'll talk about here in a minute, you want to make sure that you consider if those things are things that are going to affect you. As well as you want to consider making any adjustments for additional taxable income. Things like interest, or if you're planning on selling a house and you know that you're going to have to pay taxes on the income that you got from doing that. So that's very important to make sure that you consider when you're doing your withholding certificate. So let's talk. I mentioned deductions, I've mentioned credits, and you're like, what the heck does that mean? Well, let's talk about that, because a lot of times I've heard people use this interchangeably, but they are actually two different things. So a tax credit is something that directly reduces the amount of taxes you owe. And it is directly dollar for dollar reduced. So in this example, like say you have a tax credit that is worth $1,000, it would immediately take $1,000 off of your tax bill, meaning that's $1,000 less that you owe in taxes for that year. And these are really powerful things to have, right? Because they immediately save you money, dollar for dollar, whatever you have spent or whatever credit you've gotten, you get that back in taxes. Some examples of things that you'll see that are a tax credit. A child tax credit. If you have children, sometimes you can file your dependent children and get a tax credit for the children that you have. So you may be able to get money back for the money that you have paid, because you have dependent children. The earned income tax credit also does the same thing. Education credits. You can actually get credit on your taxes for some of your educational expenses. So it is important to make sure that you are taking those into account and to make sure you're getting the most out of those credits if you're eligible for them. And then a tax deduction reduces your taxable income, but is not necessarily proportional to the amount. So, for example, it depends on your tax bracket. So, for example, if you are in the 22% tax bracket, and you had a $1,000 deduction, it doesn't necessarily take $1,000 off of your tax bill. It would take it based on the tax bracket you're in. So it would actually take $220 off your taxes, not $1,000. Some really common ones that we see are for IRA contributions. If you are contributing to retirement, your student loan interest, you won't necessarily get all of your student loans interest deducted, but you can get a portion of it taken out with the student loan interest deduction. Right. So it's time to file for, we'll say, for next year or this year, if you forgot that yesterday was tax day. And you're going to need your social security number or your tax ID. You're going to need your spouse's full name if you have one, their social security number or tax ID number, and their date of birth if you're married. If you've been given something, an identity protection PIN, generally these are given to people who have been victims of identity theft to help prevent tax fraud. If you've been given one of those by the IRS, you'll need that too. You're going to need your name exactly as it appears on your social security card. This is really, really important. From personal experience, I was previously married, and the year we got divorced, I ended up we filed married but filing separately that last year as we were going through the divorce, and I ended up owing some money. Well, when it finally came out and was paid, it was paid under my current name, but it had been billed under my married name. And it took me about 1.5 years of dealing with the tax commission and the IRS to get that squared away, because we had paid it, but it basically got lost in the ether somewhere because what was on the return and what was currently on my social security card didn't match. So it's very important to make sure that those things match. You're going to also need your date of birth. You're going to need your current home address. You're going to need copies of all of last year's federal and state tax returns in case they have to cross-reference information. You're also going to need all of those documents that we talked about with your income sources, your W-2s, your 1099s, or any of those other things that you have gotten. And make sure you have all of them, because if you file and don't have all of it, then you have to go and file an amendment, which you can definitely do, but it's kind of a pain. So make sure that you have that stuff before you file. And then make sure you have any documentation to reflect any credits or deductions that you may be eligible for. So make sure you have records of receipts that document anything that needs to be deducted. Okay, so now we're ready to file. Can you do it yourself, or should you talk to a professional? Well, let's ask ourselves some questions to kind of figure that out. Do I fully understand my tax situation? Do I know what's going on? Do I understand what my filing status is? Do I know which tax credits and deductions that I'm eligible for? Do I understand the IRS's rules and regulations and lingo so I know how to file it myself? Do I have the patience to sit down and do those forms myself? Or do I want to pay someone else to do it for me? What will I do if I encounter something I don't understand? Do you know how to navigate the IRS's website to find the information you need if there's something you don't understand and you need more information? Are your taxes complicated? That can mean a lot of things. If you have maybe multiple businesses, or you live on a farm, or you have other, multiple jobs, sometimes that can cause your tax situation to be complicated. And that'd be one of those situations where you probably want a professional. So if your situation is fairly simple, you have one job with a W-2, you don't have a whole lot of interest coming in, you can probably file it yourself because it's a fairly straightforward process, especially with software out there like TurboTax and some of the others that are there. You may be able to do it yourself. But if you started a business in the last year, you had a child, you enrolled yourself or your child in college, you bought or sold a house, you experienced any other major financial event, maybe you got married when you weren't previously, you may want to consider talking to a tax professional because that is what they do. They get paid to have that knowledge, to be able to understand how to navigate the IRS, to understand what the rules are, to know if there are any new changes that could affect your tax situation. So because you're not only paying for them to take the time to put your taxes together, you are paying for their expertise. Especially if you pay for someone who is certified, like a CPA or an EA, because they have continuing education that they have to complete in order to keep that certification, to make sure that they are doing what needs to be done. But if you do decide to prepare your own return, make sure you're educating yourself. The IRS's information website is not the easiest to navigate, but it is full of a host of information. I have an aunt who is an accountant, and if I ever have a tax question and I ask her the tax question, she immediately sends me a page from the IRS. So I know that there are tons of stuff out there. You just kind of need to know where to look and be able to research and poke around until you find what you need. So if you decide that you're going to hire a professional, here's some questions that you need to ask. Do they hold an active license? Yes or no? If they do, you can actually look them up in your state and see if they are still in good standing. Are they compatible with your needs? Their particular specialty, their personality, their communication style. Maybe you are a person who needs to be available, have someone who's available by phone to answer questions as you go through the process. If you have a CPA who that is not their style, they are email only, they will take your tax returns and do them, that may not be the person for you. But if that is how you operate and you want to be able to just send off all your information and have them take care of it and send it back to you, then that might be the person that is right for your situation. Do they have the experience you need? Do you have a unique tax situation? Maybe you got divorced and you're not quite sure how to navigate that situation, or you just inherited a bunch of property from someone in your family and you want to know how to navigate paying the taxes you're supposed to be paying on that. A professional can do that, and you can find out what their specialties are by asking them, because there are some who may be more specialized in corporate tax versus income tax versus other things. And how active is he or she in their professional associations? That's important, because people who are active in their professional associations are taking an extra step to make sure that they are up to date on the latest things and that they are really participating within their profession. So that's important to consider. Make sure you do your research. I've left some links here for our Oklahoma Society of CPAs, as well as the National Association of Enrolled Agents, where you can actually go and find CPAs or EAs in the area. And then if you're unsure if you can afford help, because I understand sometimes it can cost money to file your taxes. There is a federal program called the VITA program. It is the Volunteer Income Tax Assistance Program. These programs are through many schools. Sometimes they are through churches, nonprofits. It just kind of depends on your area. But these sites offer free tax free tax preparation and assistance to lower or moderate income people, as well as the elderly. So you can look and find out about this program to see if you qualify, as well as find someone in your area at this link that I've listed right here. All right, so you've won. You filed your taxes. You have talked to your professional if you needed to. You have filed it yourself. What happens if it says that you owe? Well, you still have to file your return. The IRS already has that information, so it's really important to make sure that you still file your return by the tax day, which is generally April 15th, unless April 15th falls on a different day, on a weekend. Sometimes they'll extend it to the 18th or the 17th, but it is almost always April 15th. You have to make sure that you have filed, because there are penalties for not filing or not filing an extension by that date. And that's actually going to make the amount you owe higher. So make sure that you are filing by that date. What if you can't pay it all by the deadline? That is okay. You can pay as much as you can, and then you can actually contact the IRS or the state of Oklahoma, depending on who you owe taxes to set up a payment plan. It used to be that you had to physically call and ask for one, which can be kind of intimidating, but both of them have instituted ways that you can go in and you can pay your taxes online now and set up payment plans online. So you can check these out if you do end up owing. What if you get a refund, right? That is what the goal, I think, for most people is they'd like to be able to get a refund. Well, if you get a refund, make sure you're being smart about that refund, right? It is not free money. It is money that you could have been using every single month for other things. But since you have it, try to be smart with it. Use it to build yourself an emergency fund. The number one thing to bust someone's budget is not being prepared for an emergency. Even if you have, $1,000 stashed away and that's it, that is $1,000 less than in the face of an emergency that you would have to go into debt to take care of. Use it to reduce your debt. If you've already got an emergency fund, but you've got some credit card debt, or maybe you've got a student loan that you're trying to get rid of, utilize that to go towards a debt payment. And it is a really easy way to make a big lump sum payment onto the principal of some debt and help save you some money in interest and get you out of debt faster. Try using it to save for a big purchase. We're actually going on a vacation this year, and that is what I use my tax return for. It is sitting in a savings account waiting for the time that we are actually purchasing those things. That could be for, you could also use it for a big purchase within your home. If you need, air conditioner repair, or you need to get siding fixed, you can utilize it towards some other type of big purchase that you need. Also consider putting it towards your future, right? Especially as a student, retirement feels like it's really far away, but the faster you start investing your money and saving it for retirement, the better off you will be. Because money compounds and it ends up growing and growing and growing. And the more time you leave it to grow, the more it grows. So consider that. If you're a parent, maybe consider making a large contribution to a 529 plan for your child. Why is that important? Because a 529 plan helps a student to pay for their education. And if you really want your student to be able to have an education without having to take on student debt, this is a really great way to do that. And you can get tax advantages where you can actually get money off of your taxes for your contributions to 529 plans. So consider that if you do come into a refund. Some other things to consider, and I kind of already mentioned some of these. So getting a large refund means basically you're giving the government an interest-free loan of your money. Now, if you're okay with doing that, go on ahead. But consider adjusting your withholdings and completing a new W-2 if you got a huge tax refund this year. Because this will make sure that your employer is only taking out the necessary deductions, the things that you need to take out, and it'll give you more money in your budget on a monthly basis. This is so important right now with the fact that, in prices of things have been going up. This may be a little bit more money to give you some breathing room during the month. So consider that if it works for your situation. And if you're not sure how much you're supposed to be withholding, talk to that professional that helped you with your taxes. They can help you determine about what it's going to be next year and anything you need to consider, and help you figure out what you actually should be withholding for your taxes to help make sure that you are getting maybe a smaller refund, if any refund at all, because ideally you just want to break even. You want to make sure that you've paid your taxes, but you still want to make sure that you have as much of your money left as possible. All right, y'all. So here are some resources for you. I've already mentioned some in this, but here are some more. This is the website for the IRS, the information on that VITA Volunteer Income Tax Preparer Assistance Program, as well as that information on the Oklahoma Society of CPAs, the National Association of Enrolled Agents, and more information on how to pay your taxes for in Oklahoma and for the federal payments to the IRS, as well as our website, oklahomamoneymatters.org. As I mentioned earlier, we are a financial literacy initiative, so there is a ton of financial information on there to help with budgeting and credit and all of those things. So that being said, thank you guys so much for joining me today. I hope that you found that useful and maybe understand a few more terms that you didn't understand before. I will go ahead and open the floor for questions. If you have any, please feel free to go ahead and put them in the chat. And if you don't have questions and you need to hop off, this is my contact information if any questions should arise later. So I'm going to go ahead and pause for just a minute. And if you guys have any questions, please feel free to put them in the chat.